If you've been struggling with trading during this market chop, don't worry, a lot of people have. I'm going to show you one of the most important indicators that will improve your swing trading success. Now, if you take a look at my chart here, you notice it's pretty dang simple. I've got the S&P 500 on a daily chart. I've got a volume indicator down here. I've got ATR down here. We're going to ignore that for now. The only thing I want you to focus on is these three purple lines. These represent the volume weighted average price anchored to specific lows. I'm going to teach you how to use this to swing trade, how you can identify false supports like what you saw here, and also how to use this to make a lot of money using options as well. As always, hit that subscribe button to support the channel. This is not financial advice. Do your own research, and here we go. The volume weighted average price. Here's the reason this works so well, guys. Big institutional players, banks, hedge funds, billionaires, pension plans, when they buy and sell stock, they have to do it on the volume weighted average price because they're buying and selling in massive blocks that are so much that they would affect the price of the stock and get a bad fill if they tried to do it all at once. And so what they do is they say, hey, I want to buy $1 billion of Apple on the volume weighted average price, or I want to sell $1 billion of Apple on the volume weighted average price. Now, the volume weighted average price, they'll usually say for the day, the month, the year, until filled or something similar to that. And also, they use these as long-term indicators to figure out when good accumulation and distribution zones are, right? So if you look at the accumulation distribution method, you can see here, we're getting some accumulation, right? Everybody see this? Let me add a little drawing here. So right here, we have some accumulation happening. And then right up here, we have some distribution happening, right? You can see the accumulation moves the price up, and then the distribution, the price comes back down. A little bit of accumulation there, price up, distribution, price down, up again, and a bunch of market chop. Now, what I've done here is I've anchored the volume weighted average to lows or significant times, like this one is anchored to the first day, trading day of the year. And I want to pay attention to this one right here. So this one's anchored to the first trading day. So let's say you saw that the price of the S&P was just moving up. There's a nice distribution happening. And then you see the price moving back down right into the volume weighted average. So you buy here right around $500 a share. You know, you don't time the bottom perfectly, but you get in for $500 a share. That's a nice 10+% move, depending on when you exit, maybe 6%, maybe 8%, 10%. Just in buying the underlying, right? You wait 2 months and you're at 10%, 3 months you're a little higher. 2 months for 10%, that's not a bad swing on the S&P 500. Now, if you waited even further, you'll notice right here, look at this. Here we have one, if I set a new volume weighted average to this low, you notice it cuts right below that. And it doesn't do anything for us, right? It's not support at all. And this next one, it does catch. So what's happening here? These are usually news-related events. So this is important for any swing trading. News trumps everything. If you have the best indicator set up in the world, it will always be trumped by news. You can have, a golden cross, bullish EMA, VWAP bounce catch, whatever, and then it's announced that the Fed is raising rates by 10%. Well, that's going to just absolutely destroy anything that you've been looking at on the charts. So news-related events, but it is notable that it caught here on this volume-weighted average price. This gives this one now a double catch, which means if we come back down to this price, that's a very strong indicator that this is going to be a place to play off of when the S&P 500 moves back down. I would also keep in mind this one here for as it moves up and then comes down to see if it starts catching on this more recent anchored low volume weighted average. Now, if you bought here, this is really interesting too, right? 510 to 530, get a nice $20 gain on the S&P, so you're getting about like 4% in the course of a week. Phenomenal play. Let me show you what happens though when you buy options, because remember, we're swing trading here. We're not day trading, right? So here's like some day trading stuff. You're looking to play these, these up and down swings on the SPY. That can be profitable, but also pretty hard to do. Most successful traders are swing traders. They play the patient game. Look at this. So this right here on this bottom chart, what I've done is I've mapped out some SPY contracts. These were call 510s that expired on 7/19. And you can see I've got this on a daily chart, so you see where the crosshairs move, right? So if I go to this dip here, these contracts were going for about $1,000 a piece. Now, if I bought these contracts, right, so if I bought shares, I'd be up about 10, 15%. If I bought these contracts, well, over the course of a month, I'd be up over 100%. If I held even longer till the absolute high, I'd be up 500% on my contracts. And even right now, with the most recent dip, I would, or excuse me, I guess these expired. So even when they expired during that dip period, I was still up 380% on these option contracts. This is where swing traders make their money, right? You see a dip like this, you see an accumulation on a volume weighted average bounce, and you buy some contracts that are noticed 3 months till expiration. So the time is what's helping me take this into a win here. Because if you notice, like, let me zoom in on this, right? So you notice, say I bought here, $1,500 comes up, comes down right here. I'm down on that position, and then it moves right back up nicely and rockets, right? But what's good about this is this gives you time to accumulate, right? Maybe I buy here, it comes up, I'm like, oh man, I wish I had more. Oh, second opportunity, double down, and there we go. Moving up to 280% gain, 300% gain, 400, 500% gains. And that's the accumulation distribution model. The other thing you'll notice, and you'll see this down here in these volume candles, this is one of the secret indicators I like to use, is these volume candles here. Check this out. Not a lot of volume on these contracts until it starts moving down. You notice the volume's picking up a little bit, picking up. And then look at this candle. Over 4,000 contracts purchased this day. So let's just say that those contracts were purchased at an average of $1,100 a share. That's a $4.4 million position. Not saying it was all purchased by one person, but it's a $4.4 million position. And sure enough, what we see happening is the price moves up, and those contracts start getting liquidated, and somebody made a lot of money there. So you can use that as kind of a hidden indicator. Obviously, it's not always the best, because you're going to get big old candles like this too. Like, look at that. Look at that. 14,000 contracts purchased there. No necessary indication of anything. My guess is this is someone getting out of their position, maybe rolling their position, something like that. So the last secret indicator that I want to give for this, and I call it secret, it's really not secret, average true range. I want to look at this, and volume can kind of be helpful here too. Because all this does, this just says, what's the average amount that SPY is moving up and down in a single day, right? So if it trades between 500 and 505, then the ATR for that day, the range for that day is $5, right? So the average range in general is going to fall as the market stabilizes, and then it will spike during times of big sell-offs or big gains, right? Big news events that spike the VIX, things like that. And you'll notice, take a look at this, right? So you'll notice this dip starts happening, and the average true range starts spiking. And that, when you see it start spiking, is another good indication that, hey, I found a dip I want to get in. Not always a good indicator, but you can see, right? Like right here, average true range didn't really spike. Well, I guess this wouldn't really be the dip that we bought anyway. Be more of this one here. So you can see here, price moves down, average true range is spiking. Maybe a good time to start getting in. And sure enough, as you do, it starts slowly creeping back up over time. Average true range falls. And then look at that. Boom, big spike in average true range. Catch the dip here. Let's take a look at this actually. Let me show you this. Let's say you nailed the bottom. You saw this happen. Boom, hits 512. We're going to take a look at some more recent option contracts. Let's go about 3 months out again. That's the best way to do this. So we'll go end of November. And then let's just say you bought the call 530s. So we're going to send that to yellow. You see how I did that there? I just right click. I go send to and then yellow. And when I go back to my charts, this is now going to be that option contract. So you can see here, right? Here's where we were. These call 530s were going for about $2,300. Today, they're going for about $2,700. Not bad. Well, maybe let's get a little closer to the money. Let's go for like the 520s, right? Let's see how the 520s did. And the 520s are about the same. So you have, we're going to try to cut off that huge dip there. So we've got at the bottom of the day, maybe like $2,800, $2,900 here, right? And then now we're sitting at $3,200. So a nice little bit of a gain, but you'll notice again, look at the volume. You see the volume move up, and probably if I go into like the 550s, we'll see something similar. See this cluster of volume happening? cluster volume. See on the lows here, you're getting it for like $1,100, $1,200, now $1,500. So you're up 30% over the course of a week. Now, if this rally continues, you'll be up a lot more over the next few months. If not, though, great to set a trailing stop and get out. So this is my favorite indicator for swing trading. It's absolutely phenomenal. I want to show, let's just choose a random example. Let's look at Nvidia. A lot of people like Nvidia, so we're going to look at Nvidia. And I'm going to have to change these dates around. Let me get rid of some of these lines here and just clean up this chart that we're viewing. Okay, so this is good. This one's anchored to the beginning of the year, which happens to be a dip. This one actually looks like it's still good. I mean, it generally followed the SPY dips. Now we can probably just leave it. So if you'll notice, take a look here. Maybe I'll add one more. I could add one more right there. But you'll notice here, right? So if we come all the way back, so it doesn't look like a dip until you until you zoom back like this, right? So you can see here, dip, purchase, nice rally. Dip, purchase, nice rally. Add a new volume weighted average. This could have been added here or here. You can play around with it. It's not a perfect science. Look at this. Huge rally, dip, huge rally, dip. Now we're cutting through here, but notably it catches right here. So you see that, how it catches right there? So you buy here at around $90 a share. Boom, we're back up at 115. Huge move up. Let's look at something else. Let's look at Apple. Let's go to Apple here, right? Clean up some of these lines. And Apple's tracking very different than Nvidia and then SPY. So we're going to move these lines around a lot. I'm actually going to move this this line. I want to move it all the way back to the beginning of 2023. That's going to be an interesting place. So we're going to move this one to 2023. 1-1 is close enough to where we want to go. Look at that. Do you see how beautiful that is? Look at this. Catch. I mean, you can even catch there. 2, 3. Big accumulation zone here. Do you see this? Look at this. Look at this big accumulation zone here before a just monster rally from 170 to almost 240. Huge, huge, huge. Now you'll notice again, look at this. So we add a new volume weighted average here and it just cuts right through it. Nothing's happening, right? Nothing's happening on this one. So this one I wouldn't worry about. It's not going to be a good indicator for us. But if we add one here, it looks like to some degree that's being respected, right? Kind of cut below for a day or so and then rallied right back up. So really interesting. You see the accumulation, especially on a volume weighted average, that accumulation starts happening, boom, move right back up. And we could go all the way back here too, right? Let me move one. Should I move one to 9? Let's do this. 9/23 of 2020. I'm going to move this to 9/23 of 2020. We're going to go 09/23/2020. And take a look at that. Look at this. So a little bit of chop, accumulation, boom, move up. Accumulation, move up. Here we go again, move right back up. You can see that volume weighted average. I don't have it at a perfect place. There's probably, if I zoom this chart out, we could probably find, let's go 10 years, right? Let's just find the perfect place. This might be coming off of this dip here, so like 724. Let's just move this to 724. 723 is close enough. Look at that. You see that? Catch, bounce, bounce, bounce every single time. Look at those beautiful catches and bounces. I mean, we could go to COVID lows even, 324. I don't think we'll get anything for COVID lows as a catch, but you know, these can still be useful. Look at that, we did get one. COVID low, rallying this whole time, boom, comes back down. Big buy opportunity right there. You're buying at 120, and then look at that face-ripping rally all the way up to $200 over the next 6 months or so. Let's do one more chart. I'm going to look at one more chart, and then we're going to call it good because this video is getting kind of long. Hit that subscribe button, guys, if you haven't already. Let's see. Let's just do a different sector. We've been in tech. Let's look at what's that one big real estate one? Huh. Why am I blanking on it? Oh, there we go. Realty income. We're going to look at realty income, guys. Because it's like, what the heck? This is a totally different sector. Does it still work? I don't know. Maybe. Okay. So here we are. We're at COVID lows. Look at this. Starts accumulating here. Comes down. Boom. Touches off. 58 to 60, right? We're talking REITs, right? This isn't going to be as crazy. Boom, touch and go, touch and go. Move forward again. So you can see these touch and goes work really well on the volume weighted average price. Not a perfect science, but it works really well. The other way it works, let me show you this. Let me anchor it. I'm going to anchor it now to this high. So we're going to anchor it to 220. And I'm going to show you what happens. This is wild. 220. Watch this. Right? Comes down. Uh-oh. Looks like we're going short. Oh, look again like we're going short. And you can see how that works, right? Let me get another high. We're going to anchor to this high right here now. What's this? This is 8/11 of 2022. So 08/11 2022. This will be the last one that we do, right? Okay. Look at this. Comes down. Here's, oh, spikes above a little bit. Crashes right back through. Comes up. Hits this again. Right back down. You see this line, right? Let me make this a different color so you guys can see this one. We're going to make this one green. Look at that. So you can see, right? It's not a perfect indicator. Cuts above for a little bit. Comes back below. Oh my gosh, look at that. Right down. Oh my gosh. Right back down. Now, notably, we crossed above again. So this can also be a way to say, hey, are we in a bullish trend or a bearish trend right now? Right now, it looks like realty income is moving from a bearish trend into a bullish trend, right? You can see, you can just see the massive accumulation that's happening here. Look at that accumulation zone. Huge accumulation happening, moving up. Maybe we see some distribution and we see some chop, but this is looking really interesting. I know I said that was the last one, but I'm going to give you guys one more. We're at like 16 minutes. We'll go to a 20-minute video. Let me look at, let's look at GameStop. I'm going to look at GameStop right now, and we're going to get rid of all of these lines because we don't need them. We just need the volume weighted average price. That's the only thing that we need. So I'm going to take this one and we're going to anchor it to 1/27 of 2021. Watch what happens. 1/27/2021. Look at that. So it's anchored here. Oh, I missed it by a day. It's 28. Let's anchor it to 28. It won't make that big of a difference, just a little bit, right? And it really should be anchored to the high of the day. That's all right, though. It's not going to make that big of a difference. You'll notice, though, what ends up happening is it creates this nice line. This one, interestingly enough, acts as both resistance and support. You can see moving up off of this several times, then cutting below, right? Crazy. Let's look more recently. Let's get rid of some of these lines here. And get rid of that one. So let's just say we're like, hey, you know what? I want to play the volume weighted average. Yeah. You know what? GameStop's not actually doing that well with it. Now that I'm looking at it, there's not as much volume weighted average action as I would have expected. Huh. Well, goes to show, not a perfect indicator. We'll look at one more then. Let's look at, I don't know, what's something that's, United Healthcare. What is that, UNH? Here we go, UNH. Look at that. Catch, bounce, 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 all the way. You guys see how it works. I'm done talking. Use this however you will. It's made me a lot of money. I hope it makes you guys a lot of money too.